2024 was the year everybody's insurance app promised to save them 20%. It was also the year car insurance in Texas jumped roughly 23% to nearly $3,000 a year for full coverage. Sit with that for a second. The discounts went out, the rates went up. Both of those things happened at the same time, and they are not a coincidence, because the app on your phone that grades your driving was never really built to save you money. It was built to sort you, and for a lot of drivers, sorting means paying more. In the next few minutes, I'm going to show you exactly what that little app actually measures, the fine print that lets your discount quietly turn into a penalty, and then something bigger, a lawsuit that revealed you may already be enrolled in driver tracking through apps that have nothing to do with insurance at all. And I'll finish with what the smartest drivers do instead, because refusing the app does not mean giving up on a lower bill. Stay with me, because the last part is the piece almost nobody gets right. First, know what we're talking about. Every major insurer runs one of these programs now. Progressive calls it Snapshot, Allstate calls it DriveWise, State Farm calls it Drive Safe and Save, Nationwide calls it SmartRide. Some of them mail you a little dongle that plugs into the port under your dash. Most of them now just use an app on your phone. And the newest version skips both. It pulls your driving straight from the connected car systems we've covered on this channel, the same modems owners have been unplugging. Different names, same deal. Let us watch how you drive and we'll give you a discount. So what does watching actually mean? The app is scoring you on a handful of things every single trip: hard braking, rapid acceleration, your speed, how many miles you drive, what time of day you drive them. Late night miles are poison to your score, even if your late night miles are a hospital shift, whether you touch your phone while the car is moving. And on most of these programs, your location, trip by trip. Now think about what is missing from that list. Context. The app knows you braked hard. It has no idea a dog ran into the road. It knows you were out at 2 a.m. It has no idea you are a nurse. It knows the phone moved during the drive. It has no idea your passenger was the one holding it. One of these systems once flagged a man as a reckless driver for hard braking at the same spot at the same hour, day after day. It was his own driveway and he was braking so he would not hit his cat. The car knew that he braked, it never knew why. That is the machine your rate is riding on. And the phone versions have a special flaw the brochures never mention. Your phone does not know who was driving. Ride along in a friend's car while they drive badly, and on some of these apps, that trip can land on your record. Take the bus through stop-and-go traffic. Sit in the back of a ride share. The sensors feel braking and swerving, and unless you remember to flag every single trip as passenger, the app can grade you for driving you never did. Now the fine print, because this is where the 20% promise falls apart. Notice the wording in every ad: save up to 20%, up to. The typical sign-up gives you a small participation discount just for enrolling. A few percent, enough to feel good. The real number gets decided months later, at renewal, after the app has built its file on you. And here's the part most people genuinely do not know. On several of these programs, the file can move your rate in both directions. Progressive has been unusually honest about this over the years, and by the company's own past disclosures, roughly 2 in 10 Snapshot drivers end up with a higher rate, not a lower one. Think about that trade. You handed over months of your location and behavior for a coin flip, weighted against the people the algorithm doesn't like, such as night workers, city drivers, and anyone whose life produces hard braking that has nothing to do with skill. And when the discount shrinks or vanishes at renewal, the data doesn't vanish with it. The file stays. But here's the moment this story stops being about one app you can simply decline. In January of 2025, the state of Texas sued Allstate and its data subsidiary, a company called Arity, and the complaint describes something most drivers still do not know is happening. Allstate paid the makers of ordinary everyday phone apps, Life 360, the family locator, Gas Buddy, the fuel savings app, Fuel Rewards, a driving app called Rootly, millions of dollars to embed Allstate's tracking software quietly inside them. Download the Gas app, and a piece of the insurance company's code came with it. According to the state, that software tracked the location and movement of phones as often as every 15 seconds, swept in more than 45 million Americans, and was used to build what the lawsuit called the world's largest driving behavior database. And the purpose, per the complaint, was exactly what you'd fear. When your policy came up, an insurer could reach into that database and use your own driving, collected without your knowledge, to justify raising your price. And it didn't stop at phones. The same suit says Arity also bought driving data straight from the automakers Toyota, Lexus, Mazda, and the Chrysler, Dodge, Jeep, Fiat, and Ram family, the very connected car pipeline we've spent the last few videos teaching you to shut off. So understand what the game actually is now. The insurance app is just the polite version, the one that asks. The impolite version was already running through your gas app, your family locator, and your truck's modem. Texas made history suing over it, the first enforcement of its kind under the state's new privacy law, but the database it describes was built over years, and Texas is one state. So let's talk about the smart move, because it is not panic, and it is not paying whatever they ask. First, understand who these programs are actually good for, because I promised you honesty, not a rant. If you genuinely drive very little, a retiree doing 3,000 miles a year, a second car that mostly sits, a pay-per-mile program, the kind that mostly just verifies your mileage, can genuinely save real money. Mileage is the one measurement that's hard to twist against you, and some states lean that way on purpose. California, for instance, largely limits insurers to using how much you drive, not a minute-by-minute grade of how you drive. If that's you, the mileage-only version is the least dangerous member of this family. It's the behavior scoring apps, the ones grading your braking at 2 in the morning, that smart drivers are refusing. Second, if you're already enrolled, don't just delete the app in a huff. Call and formally unenroll before your renewal date and ask 2 questions in writing. Does leaving the program change my current rate, and what happens to the data you've already collected? Make them say it. Third, clean the leak we exposed a minute ago. Go through your phone's location permissions, app by app, exactly like we covered in the last video. Any rewards app, gas app, or family app with always-on background location that doesn't absolutely need it, cut it to while using or delete it outright. The lawsuit told you precisely which categories to distrust. Fourth, pull your files. The brokers that traffic in driving data, LexisNexis and Verisk, are consumer reporting agencies, and you have the right to request what they hold on you and dispute or demand deletion of it. While you're at it, pull your claims history report, the one insurers call your CLUE file, because errors in that file raise rates too, and nobody checks it. And fifth, here's how you actually get the 20%, the boring way that works. Shop it. Every renewal, not every 5 years. Get 3 or more quotes, because the sorting machine cuts both ways. The same driver can be priced hundreds of dollars apart by 2 companies. Raise your deductible if you've got the savings to cover it. Bundle if it genuinely pencils out. Ask about the discounts that do not surveil you. Good student, paid in full defensive driving course. The insurers are counting on inertia. The discount they least want to give you is the one you get by walking. Because step all the way back and see this for what it is. For 100 years, your insurance rate was built on things you did, your record, your claims, your miles. What's being built now is a rate based on a machine's opinion of your Tuesday night, collected by your own phone, scored without context, and increasingly gathered whether you opted in or not. The 20% was never the product. You were. And the drivers who come out ahead in the next 10 years won't be the ones with the highest app score. They'll be the ones who understood what the app was actually for and made the company compete for them the old-fashioned way. Thanks for watching. If this made you look sideways at that little discount app, do me a favor and subscribe because the next one goes even deeper. There's a recorder in your truck right now that doesn't report daily like the tracker did, it waits. And in the worst 5 seconds of your life, it becomes a witness in court, for you or against you, depending on who gets to it first, who's legally allowed to read it, and the rights almost no driver knows they have at the side of the road. That's next. Until then, check your renewal date, pull those quotes, and remember, your record should set your rate, not your phone's opinion of your commute.